Either side of positive or negative. Let's take a look at the sectors. We've got a modest reversal of the trends of last week. So remember what happened last week. Banks generally had a horrible week. Industrial's not such a great week either. They're modestly on the upside. Semis had a great week, as Jim noted, and they're modestly on the downside. So this is a little bit of sector rotation, but it's pretty modest, and it's early in the trading session. The bulls have a real dilemma. They've got a real problem right now, and I can explain it to you very simple. Weak global growth is capping all of the upside. We are very expensive now if you are assuming 0% earnings growth. We're over 17 times forward earnings right now. You can't justify 17 times forward earnings with flat global growth and no earnings. Even if you have 5% at the highest end that people have, 5% earnings growth on the S&P, we're over 16 times forward earnings. So you've got a problem here. So the bulls have a couple of hopes to start getting the earnings estimate better. One is a trade deal, as we know, and second is to demonstrate that the growth worries out there are overstated. We had a little help today. The German sentiment numbers came in better than expected, and that was a little help. The German market came off of that. Yields moved up a little, but we need a lot more of that. That is not convincing enough to really turn around the story. So what do you do in the meantime while you're waiting for the story to change in a low-growth, low-yield world? Well, you buy technology stocks. That's the first thing. And if you look at what's going on this month, you can see all of the tech and FANG names in March are on the upside. AMD, your Apple, your Alphabet, your Amazon, your Microsoft. They're going back to buying the growth leaders because growth is very, very difficult to come by. This is a story we've seen for many years. It very rarely went away, but it's certainly back. What else do you do while you're waiting for the global economy to turn around? Well, in a low-yield world, you pay up for yield. We noted last week historic highs on real estate investment trusts. We noted historic highs on utilities as well. The whole new high list was littered with nothing but REITs and utilities, and there was a few consumer names like Merck, for example, in there. But generally, that's where people are going. They're going into anything with growth and anything with yield right now. What they're not doing is the bank stocks. We've noted what a terrible month it was overall for the bank names, particularly the regional banks, regions. This is just so far this month. You can see what a tough time people have here. Slight improvement today, but remember something, much of the regional loans that are out there are variable rate loans that we're seeing. So those commercial industrial loans that people have out on their loan book, those are mostly variable rate. The fixed rate loans, the auto loans, those are on the shorter end, even if they're fixed rate. And so you do have the mortgage loans that are higher, but 10-year, they're tied to the 10-year. But that tends to be a smaller part of everybody's book overall, maybe 20 or 30%, depending on what company you're talking with. So you see a modest bounce today in those regional banks. But when you have short-term rates, watch the 2-year come down like they came down last week, you're going to get a sell-off in the regional banks. Right now, it's sort of indeterminate trading. We're on either side of positive or negative. David, Dow's down 60 points right now.